Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all. Uh, Slightly late, there was an issue with my webcam which I was trying to rectify, and I was able to do that. So that's why a little bit late. So I would like to say hi to everyone, and this is my child Imad, who is just moving around at the back. So kindly bear with that. And today I want to talk to you about a couple of points. One is about investing into this market from a long term point of view, and what are the nitty gritties of it, why today's retail investors have become impatient, and what they need to do, the investors who have come into the market post the pandemic, and what they need to do going forward as well. So we'll discuss all that. There are two basic aspects or very important aspects that one needs to be aware of while coming into this market, and then only you can say invest into the market altogether. Nagraju, hi. Very good afternoon to you. I hope more people join in. I did not had a session on Sunday. This is because of a sore throat that I'm having right now. Also, I'm not that well because the weather here changes very quickly, and it's not very hot, neither very cold here, and which is a blessing, I would say, in this sort of you can say heat wave that is going on across India at the moment. So today we are going to talk about very important points, two very important points that retail investors normally forget, or the investors that have come into the market, especially those that are at home, especially those that are you can say working at home. They are the partners at home who are doing all the homeworks and all, and who want to make money out of the market. They have been you can say virtually struggling to do a lot of trading or make a lot of money. The reason for that, I'm talking of housewives. I'm taking talking of the ladies, especially here, because there have been a lot of queries that have come in on YouTube and across on my WhatsApp, etc., where the thought is all about that why the money is not being made in 2020 the way it was being made in 2020 and 2021. So why not this year? So I'm going to just elaborate on this fact and make you all understand as to uh, what the condition of the market normally is and what happened during the last 2 years. So we'll get started with that. I'll talk about the markets a little bit, and then we'll get to those points as well. So about the market, it has collapsed post the RBI meet, or the emergency RBI, you can say, conference, in which the 40 basis points were increased, or were increased in that level. So what I feel going forward is that there could be another 25 basis points hike, and in that scenario, the market, I mean, the market may not remain that well. So the market may not get past, you can say, 17,000, and we could be in a situation where the market may head towards 15,700 or even below, because the scenario has changed. Higher interest rates, higher interest costs will end up making the market even more volatile, and most of the rate sensitive stocks, especially banks, etc., will suffer going forward. And you would understand that many of the Nifty 50 stocks are debt laden, and there is debt on their books, so there would be a direct effect on those companies. So going forward, I see more bearishness in the market in the next 1 month or so. We could see 16,000 and even 15,700, which was the February lows, coming through. So that's about the market. Those who are holding on to a very good quality stock, just keep hold on to it. Avoid trading on the long side at this point of time, at least for the next 1 month or so. So that would be the call. So coming back to now the points that I would like to make with you, there are a couple of points I want to make here. in terms of investments, in terms of the points that people who have been investing from 2020 onwards and have made a lot of money in the last 2 years, they are struggling to do so this year, and quite advantageously they would do that. But many people are, they are finding it very difficult to understand as to what is happening and what will happen this year. So basically one thing they need to get right. So there are two special points I want to make here, two very important points I want to make here. First is there are no free lunches in the market. You have to really dig deep to make money in the stock market. You won't be able to make money on calls. You won't be able to make money on other people's call, even if that means mine or anybody or any expert. You have to really dig deep. If somebody, even if I'm giving a call on a particular stock, you have to analyze, take a look and take your own call in order to uh, put in the money, put in that buy order, and understand that how you're going to make the money and what will be the scenario in which you have to get out of the stock. If you don't do that, if you don't put in the hard yards by yourself, it will be extremely difficult for you to make money in a market which has already risen from 7,500 all the way to 18,500, and many of the stocks have gone up 10, 20, 30x. At this point of time, it doesn't seem like that for the next 2 years the market will give you another opportunity of such kind. And even if you get that opportunity of such kind, you'll have the money to invest at those levels. So the first point you need to get in your head is that it is extremely difficult to make money in the short term in the market. In the long run, if you invest in top quality companies from a 6, 7, 8 year point of view without tinkering your portfolio, I don't think there will be any issue making 15 to 18%, even more, CAGR, depending on the market condition. But if you say, like some of the queries have come in that every month uh, they want to make 10,000 rupees, or every quarter how can they make 50,000 every quarter, and every year how can money be made so that it's like a salary. It doesn't happen like that, and that is the hard fact, hard reality of the stock market. It does happen for some, and why I'm saying this is that a lot of people want to leave job and continue as stock market investor, traders, daytime traders. For those, I want to say a simple thing is that it is not easy. It is not impossible. I'm not saying it's impossible. I am doing it after 10, 11 years. It is, for me, it is slightly more easier than somebody who has come in into the market for the last 2, 3 years. So let's face it, it does require, you have to have a system in place, and your system could be totally different from systems of others. For me, I cannot do day trading. I cannot do very short term trading or scalping, or you can say just putting in, you can say puts and calls and futures and options. But what I feel I'm good at is positionally taking positions and making money over 6 months, 9 months, 1 year. And nothing else fits me. So I just comply with that, hold stocks for that period, or till that time when the stock has given me a definite return of 15, 20, 25%. You might be having some other way of making money. You have to find that way out in order to make money. And for finding that way out, if you really want to leave your job, if you really want to make money sitting at home, being a housewife, or being having a second income coming through, if you're doing some online job, then you have to put in the hours. What, how many hours do somebody has to put in? That is always a query. So it's not about putting in the hours, just about looking at the markets or reading about the markets. It's about imbibing that trend. It's very hard to tell you, but you have to live the market throughout the day in order to make money relatively easily sitting at home. That is the only way to do it. There is no timeline for that. But for example, for me, if I tell about myself, uh, I have been a cricket buff, I have been a sports buff since my childhood when I was 6, 7 years old. Not a sports buff in terms of you can say playing, but in terms of watching. So I remember from 1990, that was Italia 1990 Football World Cup. Till now I have watched, I would say, at least 2000 cricket matches, at least 500 to 700 international football matches, and I don't know umpteen number of hockey matches, etc. Hockey, cricket, tennis, and football I watched a lot between 1989 till 2010. Now my life changed when I was in US and doing my MBA there, and I realized that what potential stock markets have. And then when I came back after doing my MBA in 2011-12, uh, then I started analyzing the markets and everything. So it has been around 11 years for me doing it, and I put up the same kind of dedication. I'm not trying to perk myself up here, but you need to imbibe the market altogether in order to make money. So it is not about that, okay, I'll look at the market for 5 hours and I'll analyze this thing, I'll do this, I'll do the charts and everything, and that's it. And then I can relax and I can do other things, and then eventually I'll make money. Uh, the thing is you have to have an acumen for it. It's like you have to be crazy about it, you have to be mad about something to really make money out of it big time. And when I'm saying big time, it means that you have to comfortably live your life. So that's the second point I want to come to. The first point is you cannot make money in the market very easily the way you were able to do in 2020 and 2021. Yes, those phase will come back, but what will change? The change would be that you would have booked losses by then, and you would have had lesser money to invest at that point of time. For example, if you have put in 100% of your money at this point of time today, if the market goes to 15,000, you will be down 20-30%. Even now many of you are down 20-30%, 15%. I am down 11% on my portfolio. I can openly say that the portfolio I have made, I am down 10-11%. So suppose we end up making some money, but suppose we go down to 14,000 from here. Will we have the money to invest in the same manner that we had in 2020? Those who came into the market in 2020 had fresh money that they put in and made money from it. Now you are in the market, you have the money invested. First, you will book losses, then you'll have lesser money to invest, then you'll invest that money and bring that up to the same amount probably that you had in October of 2021 when the market hit all time highs in terms of, you can say, mid caps, etc. So what I'm trying to say here is that in order to make money, everybody will have their own way of making money, whether intraday, whether futures options, whether shorts. You can just make money by shorting stocks and by shorting markets, etc. You can make money by positionally investing like I do for 6-9 months and many other things. In order to understand that, you have to be with the market day in day out. It's like learning a language. So if you learn a language like English, if you want to learn a language like French, you have to be with it. You have to watch French movies, French serials, French news, and everything in French should be there in order for you to learn it, imbibe it in a manner that you're able to work abroad and have your first language similar to your Hindi as French. So in a similar way, Saturdays and Sundays should be spent with the market. Monday to Friday should be spent like a market. For me, I remember that during 2003 to 7 phase, uh, if I miss a cricket match or an international cricket match, I would be very disappointed, and I would look forward to any international match that India would be playing. And I would be, in fact, I remember in 2005 when Pakistan toured India, that same series in which MS Dhoni made that big knock in Visakhapatnam. I think it was around 148, etc. In that, I remember telling my sister that why do they rest? Why don't they play in the evening as well? Why do they have to rest a couple of days and all these things? Because I wanted to watch as many matches as possible. I was somebody who would love to watch international cricket. I would watch it anywhere. The similar kind of, you can say, madness has come into me in terms of the stock market, and I keep on analyzing stuff. I keep on analyzing, understanding as to what is happening in the macro environment, what is happening in the micro environment, what is happening with a particular company. And I don't look at all the 5,000 companies. In fact, I don't look at even 100 companies. I look at 40 to 50 companies that is in my watch list. If you are a Patreon member, you would have a look at it, not more than that. And you can make a lot of money by analyzing only 30, 40 companies, their charts, their you can say results, etc., all your time into it. If you cannot, I would say the hardcore fact is that it is very, very hard to make money. I'm not saying it's impossible, but it is very hard to make money in the market along with an 8-hour job if you're doing, or along with something else if you're doing for 4 to 5 hours, in which you're concentrating 4 to 5 hours and you have to put in your effort. So it's a very, very difficult trade to have, and you have to be an expert in it. For that, you have to spend time, you have to spend your energy, you have to sacrifice a lot in order to be at that place. And even then, there's no guarantee that you'll make money every month. So from October till now, I am in losses. So I'm not saying I'm the best. There are better than me traders, investors who have not made a lot of money. And that is the trend of the market. You will make money, but you will make money in a, you can say, in a 3 to 4 month period. So it won't happen in a very consistent manner that every month you'll be making money or every year you'll be making money. There could be 2 to 3 years where you'll make no money, and then the fourth year you'll make something like 10x of what you have made, or 20x. So that's what happened. And that is where I bring my second point. So my second point here is, if you really want to be in this field, and if you are, yes, that you agree that you are really passionate about it, you always want to look at the numbers, you always want to look at stocks. Like for me, at even at 8:30, 9 o'clock in the evening, I look at channels, etc., or anywhere, or I open up apps in order to look at stock prices, just at stock prices, analyzing price charts, just like that, in my free time. So if you are like that, then you need to have capital for 2 years. 2 years funds, complete 2 year funds in your bank account, nowhere else, in your bank account for 2 years, that for which you are not worried. So for example, your expenses along with your kids, etc., is around 6 lakh or 5 lakh rupees for a year. You should have hardcore 10 lakh rupees in your bank account for the next 2 years, separate from whatever you are investing, trading into the market. If you have that separate, only then you go ahead and leave your job and everything and do it. And that too, when you have spent 4 or 5 years analyzing markets and doing things the way I have been telling, or I am telling it in this video. So 2 years of funds should be with you no matter what, and then only you try and dive into it. Yes, always along with your job, you can do an SIP, you can buy good quality stocks and keep on doing investment. But from you can say from a full-time job thing, or you want to really make money from it, then you have to see. And I want to really read the comments here. What is the prospects of making money if you put in 10 lakh rupees today, say in 3 months and in 2 years? Who is going to really make money from the market? Who has the better chance in terms of probability? I would say in 2 years, that 10 lakh rupees, if you have invested in very good quality, top notch market leading companies, you will end up making at least 30% in 2 years, at least. but if you invest 10 lakh for 6 months and you have to take out money, say in October 20 or November 2022, then I would say that you could be even down 10, 15, 20, I don't know. Or you could make less, you could make more also, but the probability of you making more will be very less compared to somebody investing for 2 years. So that is why you have to have buffer for 2 years, so that if you have to hold, I'm not saying make losses, if you really have to hold your stocks, that it is going down, that okay, after 4 quarter, 5 quarter, the numbers will pick up and the stock will really perform, you have to have that leeway of a couple of years in order to really make money from the market, and then only confidence will build. Yes, you can then after 8 7 8 years into the market make money from the market from a 3 to 4 months perspective. But initially, if you have spent very less time, by less time I mean less than 3 years, reading about the market or coming into the market, then it will be very, very hard, next to impossible for you to make money every month. And don't go by anybody's call. I'm not saying at all that nobody is trustworthy, but everybody is taking a hunch, everybody is taking a call, and that's why stop losses are there. And being new into the market, and when you have tasted a lot of success with, you can say, and let me be frank here, with lesser effort in 2020 and 2021, then it's very difficult to book losses. So that's where, I mean, stop losses don't get, I mean, you don't sell your stocks on stop losses and you make a lot of losses. I'm sorry. So basically, have 2 years of funds with you, and remember that there are no free lunches. You have to put in the effort. If you can put in the effort, if in the back of your mind there's always stock prices and markets and economy that goes in your mind always, then of course get into this market. It will make you a lot of money. There is a lot of money to be made. There is no doubt about it. But the effort should be there. The more the effort, and you have to have a set, very strict and very time tested formula of making money into the market, which you will only understand once you spend something like 4 to 5 years into the market. Not like you'd be able to do it, say, by just putting in the money and just making money over a 6 months period. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That help you also ask me questions and eke out answers in greater detail. So you can ask the queries here as well. Thanks a lot, Yash. Thanks. Uh, See, 3800 could come in onto TCS over the next 6 months or so. I believe over the next 1 year, there is a possibility that TCS could hit 4200 to 4500. See, all IT stocks currently, Bharat, is are very, very attractive, and IT index itself is down 22% from the top. I believe that all these can be bought, but you have to have patience for at least 1 year into these stocks to make money. There could be more downside. We don't know about it, but all these stocks, Larsen and Toubro, Infotech, and others, look very attractive. I would say advanced enzymes look attractive, but the numbers have to really come in for the money to be made. So that's one call. Kaplan Point, I won't say you buy into better large cap pharma companies like DVs, etc. They have also fallen, so probably you can look at those. SHIL has see SHIL. The management of Somani Home has come out and talked about the numbers to be not that great for the next 2 quarters, and ever since the stock has been falling. You can hold, have a 3 year time frame. The stocks should do well over a 3 year time frame or so, but it won't be. I mean, it won't be a situation where the stock will perform immediately at this point of time. Demand is a buy above 4300, not before that, or if it falls to 32 3300, that will be the time to buy demand. See, Tube Investments, in my opinion, is a very good stock from a long term point of view investment. Uh, Target price, I would say you can get 15 20% from here over the next 6 8 months, but keep invested over the next few years, should do well. Uh, See, I believe wait for sequence scientific's results. over a period of time, when the results come out, I think the stock should do well. I think this quarter results should be better. If the results are bad, you need to exit. If the results are good, hold on to the stock. Then 180 is possible over the next 6 months on Sequent. And a disclaimer, I have the stock in the portfolio. So Info Edge, in my opinion, 4200 was a strong support. 4200 has held on. That's your stop loss. Below 4200, we could see even 3800. Uh, if you have a 2 3 year time frame, I think 6000 is very much possible. If you have less than that, then you need to book losses. uh, there could be a situation where the stock may go to 5000 and then reverse. So you can take your call, probably sell on up moves. That's the call on something like Info Edge. Motherson Sumi, you can buy if you have a 2 to 3 year time frame. I won't say that you can probably add immediately and you'll make money, but that's the call. Persistent, I would prefer buying into other IT companies rather than persistent. So Info Edge, I have already talked about. You can reverse the tape and look at it. Uh, so yes, so 4200 if broken today, then we are looking at 3800, 3600 on Info Edge. See, Titan looks attractive at 2250. Again, Titan is a play between October to March. You can start accumulating here until about 2000. I think by March you will see 2600 on Titan, or before that, during the festive season. That's the goal. Bajaj Finance is good to buy here. Probably you could see 5900 on the stock, but looks good at these levels to start accumulating Bajaj Finance. So I don't hold Info Edge, and either I bought earlier, so I don't have Info Edge in my portfolio. Dixon Tech is headed towards 3000. I think 3500 is the next support. I think beyond that, you could see 3000 on Dixon Tech. So, in my opinion, I think one should wait for 3000 3200 levels to buy. I think numbers should not be that great in Dixon, so kindly wait for that. See, Birlasoft looks good. Again, all IT stocks look good, but again, the it should be a 1 year perspective kind of a buy, in my opinion, on all IT stocks. Borosil Renewable has been doing a lot of good things. On declines can be accumulated from a 3 year point of view, can double over a next 3 to 4 year time frame. I think if you're not losing a lot, then book losses on IGL or MGL. I think with these gas prices and oil prices the way they are, it will be very difficult for these companies to perform over a short term period. All right, guys. Thank you. Thanks a lot for being online. Kindly do subscribe to my channel, hit the bell icon so you can get my video straight away when I post it, and support me on Patreon. Thank you.